But what we're more concerned about is what's going to happen going forward. What's the outlook for the local Israeli economy for 2025 and beyond? Can it pull out of the challenges that have been created by the war?
I think the first thing when you ask the question of what's expected after the war is looking what happened after previous wars or other shocks to the economy. And you might have seen this picture before, but there are a few quarters added since. And I would say that one of the very strong characteristics of the Israeli economy is its resilience and its ability to bounce back after major shocks. And that's true when you look at all these are all military operations / limited wars, I would say. And you can see, for example, after the Second Lebanon War, when you look at the annual numbers, you actually don't see any effect. It's sort of, the bounce back was sort of washed away the effect of the war. And that was true after almost all the military operations before. The recovery following COVID was remarkable. I don't know if you remember, but in 2021, the economy grew by 8.5%, and then in 2023 by 6.5%. I mean, remarkable numbers. And the question is, where are we going now? And I think it's still too early to judge, although there are signs of recovery, but we're still at war. So it's too early to say that we see a strong bounce back, but we do see signs of recovery. I did talk about the strengths of the labor market. By the way, one period that we've seen that was much more difficult to get out of was the Second Intifada, which was a very long period with a lot of terrorist attack throughout the country. There were some other, there was also a global slowdown, so we also, I should always remind myself that we're also dependent on the global economy. So this is a period where the weakness was actually much more prolonged, and I think it's too early to say in a very sort of convincing way that we're out of the woods. But still, I think there are few attributes of the Israeli economy that are behind the resilience that we have seen, and I already mentioned a few of them. We have a surplus in the current account of the balance of payments, which make us more resilient, basically, to shocks. There is a surplus of assets over liabilities in foreign exchange. That's the result of many years of current account surplus. We had a low public debt, which is very important because it allowed the government to react strongly to shocks. And that was true during COVID, and that was true also during the war. So the government, because of the relatively low debt to GDP ratio, has the fiscal space to react strongly to any shock. We have a stable financial system, which means that the banks and overall financial institutions can play the role of basically mitigating the effects of a declining of income for some time on their for both household and firms. We have a very innovative, dynamic public sector, and we have a central bank that has the reserves so it can actually intervene when it needs. As we've seen at the beginning of the war, it was willing to sell US dollars, I mentioned already, and that just the willingness and the announcement, I think, was enough to stabilize the market. So I think these are sort of the main pillars of the strengths of the economy. When we look at what is projected for the Israeli economy by the OECD, you can see here in blue Israel, and in black is the average of OECD countries. It's important because we have to remember that Israel is a small, maybe not so small, open economy, and we're also dependent on the global economy. In 2023, actually there was an effect of 1 quarter on activity, so we grew by, I think it was 2% actually, and not 1.9. The OECD projects, it's still a projection because the final numbers are not in yet, but 2023 will end probably with growth rate of about 0.6 or 0.5 or 0.6%, which is, okay, I should actually put something in parentheses when I show this, this graph. Our population grows much faster than the average OECD country. So growth rate of 0.6% is a decline in per capita income. So the comparison here should be sort of, there is an asterisk there. And that's what they expect for 2026. But 2025, for this year, when you look at the range of projections, it's actually quite wide. And the reason is that I think everyone who makes projections have different thinking about where the war is going. So the most pessimistic are Moody's, actually, I think. Yeah, Moody's, which also gave their, made their projections in September. So I think their expectation was that the war will continue dragging for longer. But as you see, there is a wide, and I would say there is a broad uncertainty, and that's why there is a wide range of projections. Usually at the beginning of the year, you already see convergence of the projections, but we haven't seen it yet. I think if I have to sort of say, my expectation is that we will be at around 4%, maybe even higher, assuming that the ceasefire holds. And I think when you look at the indicators and you see the behavior of the economy and the way it bounces back following a period of stress, I think these projections by the Bank of Israel or by the Ministry of Finance are the most sort of, in my view, most realistic.
Okay, thank you. A lot of numbers and a lot of figures to digest. There were 3 that really struck me. The first was that in 2008, Israel was hardly affected by the global financial crisis, which was devastating to major world economies, the USA, Europe and the USA. Took a massive battering, and Israel almost just like brushed it off like some dust on a jacket. The second was how inflation here was so much lower, 2022, on the back of the Russian invasion of Ukraine, whereas much of the Western world had double-digit inflation. Here we barely reached half that. And the third is, of course, the outlook for the economy going forward, which seems to be, for this year and next year, hugely positive. And that's going to, I presume, would expect to be reflected in asset prices and in the currency.